Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Boland. I'm the aggressive growth stock strategist here at Zacks, and I've got a top stock pick. And then later on, my boss, Shiraz Mian, has got a top stock pick as well. All right, let's get right into mine. Mine's exciting. It's the GameStop. You can't stop. You won't stop the GameStop. Here it is. It's GME, GameStop. You've heard about it. It's Zacks ranked number one. It's a strong buy. B for growth, F for value, which is what I love to see on my aggressive growth stock videos. We can see it as a $10 billion market cap, but up that market cap, there's approximately $4 billion in cash. That's a lot of cash. We can also see from the chart right here that they had a very recent earnings announcement. The stock ran up, but then nosedived down, and now with the recent struggles, but are heading back up. So I like this stock for a couple of reasons. I think that they're insulated from the tariffs. It's all domestic business. They're also buying Bitcoin. And that's why after the beat, stock goes up to 28. Then they're going to do an offering. They're not going to use the cash on hand, but they raised another $1 billion or so via debt instruments, and that kicked the stock from 28 down to 22. Then we had a recent kerfunkle in the market, and now heading back higher. So they're buying that. Here's the other thing that I wanted to highlight. This comes from my friends at FinViz, and we can see here, this is the insider trading volume, and we can see from this, there is a $10.8 million trade. That's right here. It says 500,000 share purchase by the CEO, chairman, and president, Ryan Cohen. That's a signal that of strength right here. This is one of these glamour buys. This is one of these attention things saying, hey, listen, this stock is going to go higher. I know what's going on inside the company. I'm putting $10 million of my own money into it. So there you go, $10 million insider purchase. All right, let's take a look at all the numbers we always look at. Are you beating the number? That's a miss. That's a beat. That is a beat right there. And that's a beat. So they've been beating the number and quite handily. So maybe the days of losses are going beyond us. Let's see. So a good percentage of beats here. This quarter coming up here is the first quarter. As you were last year, this was a loss. Now we went from 3 cents to 8 cents. That's good. Next quarter, 3 cents to 8 cents. Full year, 18 cents to 47 cents. If you hear that right, 18 to 47, that sounds like a triple. 13 cents to 47 cents for next year. We'll see if they got any good growth initiatives. So here's the story. 3.4 billion in sales, going to see a top line contraction of 11%, and then another contraction next year of 13%. But they've got all this cash, and the idea is something's going to happen pretty soon with all this cash. Obviously buying Bitcoin with the debt, but there's going to be something else coming. And the stock now trades at 51 times, which is a lot, but only 2.2 times price to book and 2.8 times sales. Revenues have been contracting. That's part of the problem here. But at the same time, margins are looking up, and we get a new business line coming in because they have these billions of dollars sitting on the books. We could see something really good. Also, again, insulated from the tariffs. If we think about, the pandemic, we're all going to die. We come back up. The tech wreck of 22 didn't do too much to this stock, and it's just been hanging out. And we've been waiting for Roaring Kitty to kind of tell us what else to do. Well, we can see the earnings estimate lines have continuously moved higher for the stock. Granted, the underlying business, maybe not the strongest of things, but after they raised all that capital, you got to imagine that something good is coming, especially when the CEO puts $10 million of his own money into it. All right, that's it for me for this Zacks top stock pick. Let me throw it over to my boss, Shiraz Mian.
Thanks, Brian. The stock I have picked is a play on the macro environment in a positive sense. And what I'm talking about is that if you're one of those who is convinced that we are heading into a recession or a prolonged downturn in the economy and the market, then this stock may not be for you. I think we are in an uncertain and turbulent phase. But there's plenty of sunshine beyond this phase. So this stock is a play on that macro environment. And the stock is Goldman Sachs. This is the 1-year performance. You could see I've highlighted here. This is the February 19th peak for the market. The stock has, over the past year, done better than JP Morgan, Morgan Stanley, the financial sector, and the S&P 500. As you could see, the S&P is down 1% over the past year. Here's how Goldman Sachs has done since February 19. And you could see the picture has completely flipped. So down almost 30%. And that's one of the major reasons, given how much leverage Goldman Sachs enjoys to the macro, to the regulatory, to the risk appetites, the aggregate collective risk appetites in the market, which were out of the positives that the market was excited about as the Trump administration took office. And out of those things are still out there. So here is the key points. Goldman Sachs, I've been a fan of the company. I have it in one of the model portfolios I manage here at Zacks. The company is getting out of the non-core distractions, the consumer businesses, the tie-ins with the tech companies, and it's getting back to the basics of its core business in the blue chip investment banking franchise and far more stable and recurring asset management business. The deal pipeline is something we have been hearing about for some time, and there is no reason to think that anything has shifted or changed on that front. And what we mean by deal pipeline is IPOs in the works, mergers and acquisitions in the works, equity and debt capital raising activities in the works. And in the pipeline, because management has been having conversations with Goldman Sachs and other brokers, but haven't really pulled the trigger yet. And the hope had been for a while that we will start seeing some of their deal flow come to fruition in this first quarter, which ended a few days back, and we'll start seeing the results in a few days. We haven't really seen that yet, and since the overriding fixation currently is in the tariffs and what that does to the U.S. and global economy, so the full coming through of that outlook has been pushed out, in my sense, to the second half of the year, but it's still very much alive. The favorable regulatory environment beyond the current tariff issues, which I touched on. Here's the this is the, okay, we talked about that before. Here's the valuation question. So on a forward 12-month basis, it's currently trading at 12 times. As you could see, it always trades at a significant discount to the market. The significance of this 5-year relative valuation visual here is that the 12 times compares to a high of 17.3 times. The median is 9.7 times. And this chart shows the valuation multiple that we saw in the previous chart. This is what percentage of the market multiple is the Goldman's forward 12-month multiple. And as you could see at the bottom here, it's 0.53 or 53% of the market multiple. It has been as high as 85%, as low as 29%, and a median of 51%. And this is on a tangible book values basis. As you could see, the valuation has really been compressed lately. Here is the earnings outlook. There are some signs of trouble if you would subscribe to that view. Is here the light blue is the 2025. The light brown is 2026. As you could see, it has been on an uptrend for some time, which is the improving outlook I was talking about. And then it has plateaued in recent weeks. And the plateauing is a reflection of how the positive outlook has been pushed out into the back half of the year and beyond. But on the whole, the earnings outlook for Goldman remains very, very favorable. And as I noted at the top of the segment, if you fall in that segment of investors and traders who are relatively constructive on the macro outlook and don't see that we are heading into a ditch, then the Goldman is an excellent way of playing their outlook as the pullback, and the pullback in Goldman has been greater than, as we saw earlier, in other stocks. And that pullback gives us an excellent entry point into a blue chip finance player. So that's it, folks. Thanks for watching.